Executive Order Number 1-2019. Subject: Post-Clearance Audit and Prior Disclosure Program. Introduction. This order implements the post-clearance audit functions of the Bureau found in Sections 1000 to 1006 Title X and other related provisions of Republic Act No. 10863, otherwise known as the Customs Modernization and Tariff Act CMTA. Section 1. Scope. This order covers the post-clearance audit of all records required to be kept by all importers, beneficial or true owners of imported goods, customs brokers, agents, and locators as provided in Section 1003, subsection A, B, and C, Title 10 of the CMTA, and the Prior Disclosure Program or PDP as a compliance and revenue measure. Section 2. Objectives. To prescribe the principles, purposes, and methodology of the post-clearance audit system, record-keeping requirement, and the period covered by the conduct of audit. To provide guidance for record-keeping, document retention, and other legal obligations of importers and other customs stakeholders, and the adverse consequences of non-compliance with customs rules and regulations. To facilitate trade by strengthening customs control from the border to the back end of the cargo clearance process under a regime of informed compliance. To promote compliance with customs laws and regulations by providing a non-punitive facility for importers to voluntarily disclose or report to customs authorities the errors in goods declaration and in the payment of duties, taxes, and other charges. To provide a clear set of policies and guidelines in the application and availment of the PDP, and to generate additional customs revenues with least administrative costs to both the government and the importer. Section 3. Definition of terms. For purposes of the CAO, the following terms are defined as follows. Customs broker shall refer to any person who is a bona fide holder of a valid certificate of registration or a professional identification card issued by the Professional Regulatory Board and Professional Regulation Commission pursuant to Republic Act No. 9280 as amended, otherwise known as the Customs Brokers Act of 2004. Customs clearance shall refer to the completion of customs and other government formalities necessary to allow goods to enter for consumption, warehousing, transit, or transshipment, or to be exported or placed under another customs procedure under the following customs regimes. Customs clearance for consumption entries shall refer to the procedure of making the final payment of duties and taxes and other charges at the port of entry, and the legal permit for withdrawal has been granted. Customs clearance for warehousing entries shall refer to the procedure of filing of goods declaration and the duties and taxes has been secured to be paid at the point of entry and the legal permit for withdrawal has been granted. Customs clearance for transit entries shall refer to the customs procedure under which goods in its original form are given permit to be transported under customs control from one customs office to another, or to a free zone. Customs clearance for transshipment entries shall refer to the customs procedure under which goods are given permit to be transferred under customs control from the importing means of transport to the exporting means of transport within the area of one customs office, which is the office of both importation and exportation. Fraud shall refer to the commission or omission of any act resulting in material false statements, such as, but not limited to, the submission of false or altered documents in connection with any importation, knowingly, voluntarily, and intentionally done to reduce the taxes and duties paid or to avoid compliance with government regulations related to the entry of regulated, prohibited, or restricted goods in the Philippine Customs Territory through misdeclaration, misclassification, or undervaluation. Free zone shall refer to special economic zones registered with the Philippine Economic Zone Authority, PEZA, under Republic Act No. 7916 as amended, duly chartered or legislated special economic zones and free ports such as Clark Free Zone, Toro Point Freeport Zone, John Hay Special Economic Zone, and Subic Bay Freeport Zone under Republic Act No. 7227 as amended by Republic Act No. 9400, the Aurora Special Economic Zone under Republic Act No. 9490 as amended, the Cagayan Special Economic Zone and Freeport under Republic Act No. 7922, the Zamboanga City Special Economic Zone under Republic Act No. 7903, the Freeport Area of Bataan under Republic Act 9728, and such other free ports as established or may created by law. Next, importer shall refer to the following: importer of record or consignee, owner or declarant, or a party who imports goods in the Philippines or withdraws admitted goods from the free zones into the customs territory for consumption or warehousing, files a claim for refund or drawback, or transports stores such goods carried or held under security, or knowingly causes the importation or transportation or storage of imported goods referred to above, or the filing of refund or drawback claim. A person ordering imported goods from a local importer or supplier in a domestic transaction if the person placing the order controls the material terms and the condition of the importation. The person placing the order and the importer or supplier are related in such a way that the former may be considered as the beneficial or true owner of the imported goods, as may be exemplified by the following circumstances. The person placing the order is the sole buyer of the goods imported by the importer of record. The importer of record is an affiliate of the juridical entity which placed the order, or the importer of record and the entity which placed the order are owned by the same set of majority stockholders, whether nominal or beneficial in both corporations. The person or entity placing the order furnish the importer or the exporter with technical data, molds equipment, other production assistance, material components, or parts with knowledge that this will be used in the manufacture or production of imported goods or the goods to be imported. A person whose activities require the filing of a goods declaration, or an agent of the importer as described in section 3.5.1 of this CAO. Inadvertent error shall refer to a mechanical, electronic, or clerical error committed unintentionally by the importer and occurred notwithstanding the maintenance of internal controls necessary to avoid such errors. Inadvertent error as used in the CAO amounts to simple negligence. Locators shall refer to persons authorized to bring imported goods into free zones, such as the special economic zones and free ports. Misclassification shall refer to the use of insufficient or wrong description of the goods, or the use of erroneous tariff headings resulting in deficiency between the duty and tax that should have been paid and the duty and tax actually paid, and or to avoid compliance with government regulations related to the entry of regulated, prohibited, or restricted goods in Philippine customs territory. Misdeclaration shall refer to a false, untruthful, erroneous, or inaccurate declaration as to quantity, quality, description, weight, or measurement of the goods, resulting in deficiency between the duty and tax that should have been paid and the duty and tax actually paid, and or to avoid compliance with the government regulations related to the entry of regulated, prohibited, or restricted goods into Philippine customs territory. Negligence shall refer to failure of exercise reasonable care and competence through act or acts of omission or commission, and ensuring that a statement made is correct, resulting in a deficiency in taxes and duties paid. Principal place of business shall refer to the headquarters that holds the senior executive of a firm and is usually the center from where other locations are controlled. It likewise refers to the place where a corporation's officers direct, control, and coordinate the corporation's activities, and where the books and records are kept. Prior disclosure program shall refer to a program based on international best customs practice, authorizing the Commissioner of Customs to accept as a potential mitigating factor prior disclosure by importers and errors and omissions in goods declaration, resulting in deficiency in duties and taxes on past exportations. It may also include disclosures on royalties and other proceeds of any subsequent resale, disposal, or use of imported goods that occurs directly or indirectly to the seller. Post Clearance Audit Group, PCAG, shall refer to an office created under Executive Order Number 160 Series of 2003 as amended by Executive Order Number 46 Series of 2017, mandated to conduct audit of importers, locators, and all parties engaged in customs clearance and processing. Reconsideration of audit findings shall refer to a plea for the revaluation of the audit findings on the basis of existing records without need of additional evidence. It may involve both a question of a fact of law or both. Reinvestigation of audit findings shall refer to a plea for the revaluation of audit findings on the basis of newly discovered or additional evidence intended to be presented in the reinvestigation. It may also involve a question of fact or law or both. Undervaluation shall refer to situation when the declared value fails to disclose in full the price actually paid or payable or any dutiable adjustment to the price actually paid or payable, or when an incorrect valuation method is used or the valuation rules are not properly observed, resulting in discrepancy in duty and tax to be paid between what is legally determined as the correct value against the declared value.
Section 4. Requirement to keep records. 4.1. Audit and examination of records. 4.1.1. Within 3 years from the date of final payment of duties and taxes or customs clearance, as the case may be, the Bureau may conduct an audit, examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, document, and electronically generated or machine-readable data for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. 4.1.2. Period of limitation. In the absence of fraud and when the goods had been finally assessed and released, the assessment shall be conclusive upon all parties 3 years from the date of final payment of duties and taxes or upon completion of the post-clearance audit. 4.2. Entities required to maintain and keep records. 4.2.1. Importers. All importers, including those mentioned in the definition of importers, insofar as the application of post-clearance audit and Section 1005, Title 10 of the CMTA are concerned, are required to maintain and keep all records of their importations, book of accounts, business and computer systems, and all computer commercial data, including payment records. 4.2.2. Customs broker and other parties. All customs brokers and other parties engaged in customs clearance and processing are required to keep manual and or electronic copies of the records covering transactions that they handle. Should electronic copies of records be maintained, the record keeping must be compliant with the applicable laws, rules, and regulations on electronic data. 4.2.3 Locators. Locators are required to keep records of all transactions and activities relating to the admission and withdrawal of goods from the pre-zone into the customs territory. 4.3 Purposes of keeping records. The record shall be kept for the following purposes. 4.3.1 To confirm the truthfulness and accuracy of the goods declaration and the transaction value of the imported goods. 4.3.2 To check the adequacy and integrity of the manual or electronic system or systems by which the required records are filed, maintained, and stored, whether specific transaction-based or account-based. 4.3.3 Determine the level of compliance of importers, customs brokers, locators, and other parties required to keep records herein with laws and regulations which are enforced by the Bureau, whether or not such regulations were issued by the Bureau. And 4.3.4 To serve as basis for the imposition of sanctions for non-compliance on record keeping and non-compliance of regulatory obligations of the importer and other entities required to keep records, subject to applicable laws, rules, and regulations. 4.4 Period and place to keep records. Importers as defined herein and in Section 1003 of the CMTA are required to keep all records pertaining to the ordinary course of business and to any activity or information contained in the records required by this CAO and by the CMTA at their principal place of business for the period of 3 years from the date of final payment of duties and taxes or customs clearance, whichever later as the case may be. All parties engaged in customs clearance and processing as well as locators or persons authorized to bring imported goods into free zones are required to keep records related to such customs clearance and processing at their principal place of business for a period of 3 years from the date of filing of the goods declaration.
4.5 Record required to be kept. The following record or their equivalent document are required to be kept for the purpose of post-clearance audit. 4.5.1 Documentation on the entry of organization and structure, which include A. Articles of incorporation, articles of partnership, registration certificate with the Department of Trade and Industry, and the like. B. List of incorporators, stakeholder, partners, board of directors, and the owners. C. Organizational structure. D. Management and the key personnel involved in import processing include authorized declarant and their specimen signature. E. Capital composition. F. Stock and transfer book. G. General information sheet. H. Information of the parent company, subsidiaries, and facilitate in their capital composition. I. List of importers, suppliers, and nature of the relationship with the importer pursuant to Section 701C, Chapter 1, Title 7 of the CMTA. J. Audited financial statement and tax return for income tax, withholding tax, value-added tax, excise tax, documentary stamp tax, and capital gain tax. K. General contract and agreement with regular or principal supplier. I. Company profile, history, and description of operation. M. Relevant board resolution. N. Permit and licenses. 4.5.2 Documentation and order of purchase, which include A. Sales and other agreement in whatever form, including those covering distribution, loyalty, agency, warranty, terms of payment, and like. B. Correspondent or communication relating to the import transaction in whatever form, including purchase order, voucher, confirmation, pro forma invoice, acknowledgement receipt, notice, advisories, and the like. And C, product description or specification, such as voucher, manuals, catalogs, pamphlets, flyers, literatures. 4.5.3 Documentation of shipping, importation, exportation, and transport, which include A. Good declaration and proof of payment of duties and taxes. B. Commercial invoice, non-commercial invoice, and or consignment agreements. C. Import and or export license or permits. D. Bill of lading, master airway bills, house airway bills, and or consolidator bill of lading. E. Shipping instruction and or freight forwarder instruction. F. Certificate of origin, certificate of eligibility, certificate of inspection and loading, and or certificate of identification. G. Freight and insurance contracts. H. Packing lease. I. Transshipment permit, boat notes, and or special permit to transfer goods from one customs territory to another or from one vessel to another. J. Quota collection and or certificates. K. Customs brokerage, logistic, or freight forwarder agreement, billing, statement of account, and or receipt. I. Receipt for arrastre charges, cargo handling, and storage fees. M. Short shipment and or bad order report. N. Goods tally record or its equivalent. O. Letter of credit and application for letter of credit. P. Offshore monetary transaction or remittance advice. Q. Credit card transaction. R. Telegraphic money transfer. S. Evidence of payment by any other means, including information detailing non-cash compensation transactions. N. Permit to operate customs bonded warehouse, custom facilities, and warehouse and free zones. U. Formula of conversion, manufacturing. V. List of monthly importables, materials, quota. W. List of imported purchase. X. Summary of export, local sales. Y. Summary of liquidated and liquidated entries. Z. List of subcontractors. A. List of inventory. B. Product report. And C. Evidence of incentives enjoyed by the Board of Investment, Registered Importers, and Free Zones Locator. 4.5.4 Documentation on manufacturing, stock and resale, which include A. Inward goods register, receipt journal. B. Stock register, inventory record. C. Production record. D. Costing record. E. Purchase book. And F. Sales book. 4.5.5 Financial documents such as financial statement and other accounting information, which include A. Cash receipt and disbursement book. B. Subsidiary ledger or account payable and account receivable. C. Check record. And D. Bank reconciliation record. 4.5.6 Chart and codes of account, general and subsidiary ledger, general journal, accounting instruction manuals, and system and program documentation that describe the accounting system used by the importer. And 4.5.7 Whenever applicable, information or record as described in section 4.5.1 to 4.5.6 of this order that electronically record or stored.
Section 5. Post-clearance audit. 5.1. Composition of post-clearance audit group. The post-clearance audit group is headed by an assistant commissioner who shall exercise direct supervision and control in the management of the following operating units of post-clearance audit group. First is the Trade Information and Risk Analysis Office, and second is the Compliance Assessment Office. The Post-Clearance Audit Group, Trade Information and Risk Analysis Office, and Post-Clearance Audit Group, Compliance Assessment Office shall be headed by a director. 5.2. Authority of the Commissioner to reorganize Post-Clearance Audit Group. The Commissioner, with the approval of the Secretary of Finance, is hereby authorized to determine the number of personnel requirements of Post-Clearance Audit Group and issue the necessary order to reassign the required organic personnel of Bureau of Customs to the group. Subject to the principles of economy, efficiency, and effectiveness, the Commissioner is likewise authorized to further recommend necessary changes to the personnel and staffing pattern of the Post-Clearance Audit Group and with the approval of the Secretary of Finance. Submit the same for evaluation of the Department of Budget and Management or the DBM. 5.3. Functions of Post-Clearance Audit Group. The Post-Clearance Audit Group is mandated to conduct within 3 years from the date of final payment of duties and taxes or customs clearance an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine-readable data for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. The Post-Clearance Audit Group, Trade Information and Risk Analysis Office shall perform the following functions. A. Review available trade data to determine compliance markers of industry or other means of data groupings and set benchmarks for the purpose of developing an audit program for the Commissioner's approval. B. In coordination with the Management Information System and Technology Group or the MISTG, develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data subject to the approval of the Secretary of Finance upon recommendation of the Commissioner for use in the profiling and identification of potential priority audit candidates based on the approved audit program. C. Recommend for approval of the Commissioner of Customs the potential priority audit candidates. D. Develop policies, guidelines, manuals, and standard operating procedures relating to the audit process. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order, and as may be provided by the law. The Post-Clearance Audit Group Compliance Assessment Office shall perform the following functions. A. Prepare the audit work plan, scope, and approach for the approved priority audit candidates. B. Conduct the audit examination, inspection, verification, or investigation of records subject to applicable laws, approved policies, guidelines, manuals, and standard operating procedures. C. Prepare and submit the required reports on audit findings and recommendations to the Commissioner of Customs for approval. D. Establish and maintain a customs compliance program. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order, and as may be provided by law. 5.4. Scope of audit. The Bureau shall develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data to be approved by the Secretary of Finance upon recommendation of the Commissioner of Customs. 5.4.1 Post-clearance audit of importers shall be undertaken when firms are selected based on any but not limited to the following criteria. A. Relative magnitude of customs revenue to be generated from the firm. B. The rates of duties of the firm's imports. C. The compliance track records of the firm. D. An assessment of the risk to revenue of the firm's import activities. E. The compliance level of a trade sector. And F. Non-renewal of an importer's customs accreditation. 5.4.2 Customs brokers and importers' duly authorized agents may be audited to validate information provided by their importer clients and fill information gaps revealed during the audit. 5.4.3 The Commissioner may authorize the conduct of compliance of audit of importers, locators, specific group of importers, or other parties engaged in the customs clearance process as he may deem necessary. For this purpose, the Management Information System and Technology Group, or the MISTG, in coordination with the Post-Clearance Audit Group, Trade Information and Risk Analysis Office, shall develop the computer-aided risk-based management system to facilitate the risk assessment and conduct of audit. The Post-Clearance Audit Group shall gather data or information from other offices and organizations to set the risk parameters for audit. 5.5 Conduct of Post-Clearance Audit. 5.5.1 The Post-Clearance Audit Group shall prepare a set of post-clearance audit procedures for approval by the Commissioner to strictly govern the audit to achieve the highest level of objectivity, fairness, efficiency, and transparency. The guidelines shall include the following procedural or operational concerns. First is profiling or information analysis. The Post-Clearance Audit Group, Trade Information, and Risk Analysis Office shall perform risk profiling analysis activities on the importers. This includes data gathering and evaluation of import and export operations. B is audit notification. The Commissioner shall issue an audit notification letter or ANL to the company identified for audit. The ANL shall contain the name or names of the authorized customs personnel from Post-Clearance Audit Group, Compliance Assessment Office to perform post-clearance audit. It shall be valid for 30 days or 30 calendar days from the date of issuance, subject to revalidation by the Assistant Commissioner for another 30 days prior to its expiry, and must be served to the importer through any of the following modes of service. First is by personal service at the principal place of business, and second is by registered mail, or third, through electronic notice sent to the registered official electronic mail address during its validity. Failure to serve ANL within the period without proper justification shall make the customs personnel in charge administratively liable. C. Audit plan. The audit team shall prepare an audit plan to fit the circumstances of the audited company and meet the specific audit objectives in the most expeditious and transparent manner. D. Conduct of audit proper. The audit team shall commence the audit proper not later than 60 calendar days from the service of the ANL. In case the importer manifests his intention to avail of the PDP, the conduct of the audit proper shall be deferred subject to the provisions of Section 6.1.2 of this order. The audit proper shall take place when the audit team actually conducts examination, inspection, verification, and investigation of accounting and financial records and goods declaration and other records being kept and maintained by the importer. The audit team may require the presentation of the original of the certified true copies of documents submitted for verification of its authenticity. A copy of any document certified by or on behalf of the importer is admissible in evidence in all courts as if it were the original copy. The audit shall be completed within 120 calendar days per year of audit period from the date the importer receives the ANL. For this purpose, the audit is considered completed when the final audit report or FAR with demand letter or post-clearance audit group clean report of findings or the PCAG CRF has been submitted by the audit team, endorsed by the Assistant Commissioner and subsequently approved by the Commissioner. The issuance of the PCAG CRF shall be deemed as proof that the importer or entity subject of audit has been found to have no deficiency in duties, taxes, and other charges, and that the importer is compliant with its obligation to keep records as required by law. If the audit team would be unable to submit the FAR within the required period, a status report must be submitted to the Commissioner through the Assistant Commissioner not later than 5 calendar days prior to expiration of the said period, giving the reasons for the non-completion of the audit and the proposed period to complete the audit.
Service of demand letter for payment of deficiency. Within 5 calendar days from receipt of the demand letter signed by the Commissioner, the PCAG shall send the same to the importer through any of the following modes of service. 1. By personal service at the principal place of business. 2. By registered mail. Or 3. Through electronic notice sent to the registered official electronic mail address with a demand to pay not later than 15 calendar days from receipt. F. Reconsideration or investigation on audit findings. The importer adversely affected by the deficiency assessment issued by the PCAG and approved by the Commissioner may file a request for reconsideration or investigation to the Commissioner within 15 days from receipt of the demand letter. For requests for a investigation, the importer shall submit all relevant supporting documents in supporting thereof within 30 days from the date of filing, otherwise the request shall be denied. The Bureau through the PCAG shall have 60 calendar days from submission of complete documents to resolve the request. G. Acknowledgement letter. Upon payment of the amount demanded, the Bureau shall immediately issue without the need for request from the importer a letter acknowledging receipt of the payment made by the importer and with a statement that the audit is completed. H. Reporting to DOF and BIR. The Bureau shall furnish the DOF and the BIR a copy of the final audit results within 30 calendar days from the issuance thereof, including the amount paid by the importer. In addition, the Bureau shall provide a quarterly status report to the DOF of all ANLS issued and audits conducted. 5.5.2. Nothing in this section shall be construed as restricting or calling into question the right of the Bureau through the PCAG to satisfy itself as to the truth or accuracy of any statement, document, or declaration presented for customs valuation purposes and as may be necessary for the purpose of collecting the proper duties and taxes and to determine compliance with the government rules and regulations. 5.6. Access to records. 5.6.1. The importer shall give to the Bureau personnel authorized to conduct the audit full and free access to the premises where the records are kept or provide full and free access to a cloud-based data room or a private server or other devices to conduct the audit. This may include access to records showing the importer's document flow, financial flow, goods inventory, and other business processes necessary or relevant in determining, first, the adequacy and integrity of the manual or electronic system or systems by which such records are created and stored. And second, compliance with laws, rules, and regulations, particularly in relation to customs valuation, tariff classification, country or origin, and compliance with regulatory requirements with the end in view of collecting the proper duties and taxes. Customs brokers and the importers, duly authorized agents acting on behalf of the importer at any stage of the customs clearance process are likewise required to give authorized bureau personnel under PCAG full and free access to records covering transactions for purposes of validation and to full information gaps revealed during the audit of their importer clients. In addition, the authorized customs officer may require the importer and customs broker to submit certified copies of any such documents or extracts thereof. 5.6.2. The customs officer shall present written evidence of his authority. The person in charge of the premises must be provide the officer with all reasonable facilities and assistance for the effective exercise of the officer's authority under this section. 5.7. Documents written in a foreign language. Where a document in a foreign language is presented to a customs officer in relation to the carrying out of any duty or the exercise of any power of the Bureau of Customs, said document must be accompanied with a translation in English, certified correct under oath by a translator accredited by the Department of Foreign Affairs or by the relevant foreign embassy or consular office. 5.8. Power of the Commissioner to obtain information and issue summons. For the effective implementation of the post-clearance audit functions of the Bureau, the Commissioner is hereby authorized to 5.8.1. Obtain on a regular basis from any person in addition to the person who is the subject of a post-clearance audit or investigation, or from any office or officer of the national and local governments, government agencies and instrumentalities, including the BSP and GOCCs, any information such as cost and volume of production, receipts or sales and gross income of taxpayers, and the names, addresses, and financial statements of corporations, regional operating headquarters of multinational companies, joint accounts, associations, joint ventures, or consortia, and registered partnerships and their members whose business operations or activities are directly or indirectly involved in the importation or exportation of imported goods or products manufactured from imported component materials. 5.8.2. Summon the person liable for duties and taxes or required to file goods declaration, or any officer or employee of such person, or any person having possession, custody, or care of the books of accounts and other accounting records containing entries relating to the business of the person liable for duties and taxes, or any other person to appear before the Commissioner or the duly authorized representative at the time and place specified in the summons, and to produce such books, papers, records, or other data and to give testimony. 5.8.3. Take such testimony of the person concerned under oath as may be relevant or material to such inquiry. Or 5.8.4. Obtain information from banks or other financial institutions on commercial documents and records pertaining specifically to payments relevant to import transaction. The provisions of the foregoing paragraphs, notwithstanding, nothing in this section shall be construed as granting the Commissioner the authority to inquire into bank deposits of persons or entities mentioned in this order.
Section 6. Prior Disclosure Program. 6.1. Who may avail of the Prior Disclosure Program. 6.1.1. Any importer without waiting for the issuance of an A&L may avail of the PDP by A. Submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration, and B. Tendering payment of the deficiency, duties, taxes, and penalties if applicable. 6.1.2. Any importer who has received an A&L may still avail of the PDP by submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration and tendering payment of the deficiency, duties, taxes, and penalties within a period of 90 calendar days from the receipt of the A&L.
The importer may amend the PDP application and pay additional deficiency duties, taxes, and penalties within an additional non-extendable period of 30 days from the filing of the PDP application form. Should there be any adjustment to the application or to the original application or new issues discovered that need to be disclosed. 6.2. Exclusions from the PDP. The following shall not be qualified for the PDP. 6.2.1. Goods declarations which are subject of pending cases with any other customs office. 6.2.2. Goods declarations which are covered by cases already fixed and pending in courts, and 6.2.3 goods declarations involving fraud as defined under section 10.3.2 of this order. 6.3 Effects of PDP. Instead of the penalties involved in the section 10.3.1, the following penalties shall be imposed on approved applications for PDP in conformity with Section 104 and 108 of the CMTA. 6.3.1. For a PDP applicant who has not yet received an ANL, payment of the deficiency in duties and taxes due plus legal interest as provided in Section 7. 6.3.2. For a PDP applicant who has received an ANL and availed of the program pursuant to Section 6.1.2, payment of the deficiency in duties and taxes due plus a penalty of 10% of the basic deficiency and legal interest as provided in Section 7. Or 6.3.3, for a PDP applicant who has made disclosures on royalties and other proceeds of any subsequent resale, disposal, or use of the imported goods that accrues directly or indirectly to the seller, or on any subsequent adjustment to the price paid or payable. Payment of the deficiency in duties and taxes due without penalty and interest provided that the applicant files for PDP within 30 calendar days from the date of payment of accrual of subsequent proceeds to the seller, directly or indirectly, or from the date the adjustment to the price paid or payable is made. Upon failure to pay within 30 calendar days, the disclosure shall be subject to Section 6.3.1 or 6.3.2 of this order. 6.4. Verification and action on the applications for PDP. 6.4.1. The PCAG shall verify the completeness of the PDP application form including payment made and other supporting documents. Failure to comply with the necessary documentation shall result in the non-acceptance or disapproval of the application. 6.4.2. The audit team shall then verify the accuracy of the deficiency, duties, and tax computation and determine if all errors are fully disclosed. The verification and approval or denial of the PDP application shall be completed within the period of 90 calendar days from the submission of the complete PDP documents. 6.4.3. In relation to the specific goods declaration subject of the prior disclosure application, when there are findings of fraud or when there are other materials inaccuracies, mistakes, or errors in the good declarations, or outright violations committed that are not the subject of the disclosure but has an adverse impact on government revenues, PCAG shall recommend to the Commissioner the conduct of a formal and full audit. 6.4.4. In all cases, the tender of payment shall be accepted by the Bureau to be applied to the deficiencies in duties and taxes, including penalties, interest, fine, or surcharge, as voluntarily disclosed regardless of whether the prior disclosure application is approved or denied by the Commissioner. Any request for a waiver of penalties, interest, fine, or surcharge may be or made by the importer may be subject to the final approval of the Secretary of Finance. Section 7. Interest on deficiency, duties, taxes, and other charges plus fine or penalty. An interest of 20% per annum, counted from the date of final assessment as provided under Section 429 of the CMTA, shall be imposed on 7.1. Prior disclosure program availment, 7.2. Deficiency, duties, taxes, and other charges, and 7.3. Fine or penalty, if any. Section 8. Remedies of the importer. When the request for reconsideration or reinvestigation is denied by the Commissioner, as provided in Section 5.5.1 F, in whole or in part, the importer may appeal such denial to the Court of Tax Appeals within 30 days from receipt of the adverse ruling or decision of the Commissioner.
Section 9. Remedies of the Bureau. The remedies of the Bureau for the collection of input duties, taxes, fees, or charges resulting from the conduct of a post-clearance audit shall be obtained by 9.1. Restraint of goods, chattels, or effects and other personal property of whatever character, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property. Upon the failure of the person owning any delinquent duty, tax, and other charges to pay at the time required, the Commissioner shall seize and restrain the goods, chattels, or effects, and the personal property, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property of such persons, in sufficient quantity to satisfy the duty, tax, or other charge and the expenses of the restraint and the cost of the subsequent sale. To safeguard the interest of the government, the Commissioner may place under constructive restraint the property of a delinquent importer who, in the opinion of the Commissioner, is retiring from any business subject to duty and tax, or is intending to leave the Philippines or to remove the property therefrom, or to hide or conceal the property, or to perform any act tending to obstruct the proceedings for collecting the duty and tax due or which may be due. 9.2. Levy upon real property and interest in rights to real property. After the expiration of the period within which to pay the duty, tax, and other charges as prescribed in this section, real property may be levied upon before, simultaneously, or after the restraint of personal property belonging to the importer. To this end, the Commissioner or the duly authorized representative shall prepare an authenticated certificate showing the name of the importer and the amounts of the duty and tax and penalty due. The certificate shall operate with the force of a legal execution throughout the Philippines. 9.3. Civil or criminal action. Any or all of these remedies may be pursued at the discretion of the Bureau, provided that the remedies of the restraint and levy shall not be allowed when the amount of duties and taxes, excluding interest and penalties involved, is not more than 10,000 pesos. The Bureau shall advance the amounts needed to defray cost of collection by means of civil or criminal action, which shall be included in the budget of the Office of the Commissioner, including the preservation or transportation of personal property, restraint, and advertisement and sale thereof, as well as of real property and improvements thereon.
Section 10. Administrative and Criminal Offenses. 10.1. Failure to keep records. The following penalties are imposable to those who fail to keep and maintain the prescribed records. 10.1. Suspension or cancellation of accreditation as importer or broker with the Bureau. 10.1.2. Surcharge of 20% on the judiciable value of the goods which is the subject of importation for which no records were kept and maintained. 10.1.3. Hold delivery or release of subsequent imported articles to answer for the fine and any revised assessment. 10.1.4. Criminal prosecution and punishment with imprisonment of not less than 3 years and 1 day but not more than 6 years and or a fine of 1 million pesos. And 10.1.5. Waiver of the right to contest the result of the audit based on records kept by the Bureau. 10.2. Failure or refusal to give full and free access. The following penalties are imposable to those who deny the authorized customs officer full and free access to the records required to be kept and maintained. 10.2.1. Suspension or cancellation of accreditation as an importer or broker with the Bureau. 10.2.2 Punishment for contempt, for contumacy, or for refusal to provide access from the proper court having criminal jurisdiction over the matter. 10.2.3 Reassessment of the importation subject of audit, the declared transaction value being preassumed inaccurate, applying therein the correct valuation method, tariff classification, quantity, and or country of origin as applicable based on available data. 10.2.4 Surcharge of 20% on the judiciable value of the goods, which is the subject of the importation for which no records were kept and maintained. 10.2.5 Holds delivery or release of subsequent imported articles to answer for the fine and any revised assessment. And 10.2.6 Criminal prosecution punishment with imprisonment of not less than 3 years and 1 day but not more than 6 years and or a fine of 1 million pesos. 10.3 Failure to pay correct duties and taxes on imported goods. Any person who, after being subjected to post-clearance audit and examination, is found to have incurred deficiencies in duties and taxes paid for imported goods shall be penalized according to 2 degrees of culpability, subject to any mitigating, aggravating, or extraordinary factors that are clearly established by available evidence as described hereunder. 10.3.1 Negligence. When a deficiency results from an offender's failure through an act or acts of omission or of commission to exercise reasonable care and competence in ensuring that the statement made is correct, the offender that shall be charged for committing negligence and if found guilty shall be penalized with a fine equivalent to 125% of the revenue loss, provided the subject to Section 108, Chapter 2, Title 1 of the CMPA, a penalty of 25% of the revenue loss shall be imposed on an inadvertent error amounting to simple negligence. 10.3.2 Fraud. When the material false statement or act in connection with the transaction was committed or omitted knowingly, voluntarily, and intentionally as established by clear and convincing evidence, the offender who is charged for committing fraud and is found guilty thereof shall be penalized with a fine equivalent to 6 times of the revenue loss or imprisonment of not less than 2 years but not more than 8 years.
Section 11. Records to be kept by the Bureau. The PCAG shall keep a database of importer and customs broker profiles, which shall include a record of audit results and the following information and papers. So, 11.1, Articles of Incorporation. 11.2, the company structure, which shall include but not limited to 11.2.1, incorporators and board of directors. 11.2.2, key officers. 11.2.3, organizational structure. 11.3, key importations. 11.4, importation privilege enjoyed. 11.5, record of violations and penalties. 11.5.1, infringement committed. 11.5.2, instances of prohibited importation. 11.5.3, instances of smuggling. 11.5.4, instances of technical smuggling that includes A. Misdeclaration, B. Misclassification, and C. Undervaluation. 11.6, risk categories. 11.7, audit results. And 11.8, other information and documents from the various offices of the Bureau that may be necessary in order to facilitate the conduct of a post-clearance audit. Section 12, audit monitoring and record keeping. PCAG, in coordination with the MISTG, shall establish and maintain a real-time case monitoring and control that approved audit recommendations are properly implemented for this purpose. PCAG shall maintain a secure database of all audit results and records. Section 13, periodic review. Unless otherwise provided, this order shall be reviewed every 3 years, and be amended or revised as necessary. Section 14, turnover of records. The TOF, FAIU, or the Financial Analytics and Intelligence Unit, formerly known as DOF, FIU, or the Fiscal Intelligence Unit, shall turn over all files and documents including any pending post-clearance audits to the BOC and PCAG. Section 15, Repealing Clause, Department Order Number 011-2014, 014-2014, 044-2014, 033-2015, issued by the DOF, count number 0299, 05-2001, 04-2004, 05-2007, 03-2015, and all other orders, memoranda, circulars, or parts thereof which are inconsistent with this order are hereby deemed reappealed or modified accordingly. Section 16, Separability Clause. If any part of this order is declared unconstitutional or contrary to existing laws, and other parts not so declared shall remain in full force and effect. Section 17, Effectivity. This order shall take effect 30 calendar days after in publication at the official Gazette or a newspaper of national circulation. The Office of National Administrative Register, or the honor of the UP Law Center, shall be provided 3 certified copies of this order.